Today is going to be a very busy day for earnings, and when earnings of many companies come out, what you're going to see is many moves are going to happen. Many of those moves are going to last for a couple of minutes. Many times earnings happens and you get like in a 15-20 minutes of move, and then it can spend the rest of the time fading, or it can be a move which lasts till lunchtime and it fades, like you saw what happened in IBM, or it can be a move which can be very volatile, like what happened in SoFi yesterday. The key on an earnings day like this today is to find a earnings candidate which has legs and which is going to make the most explosive move. And in order to do that, the time tested things which you need to focus on is the stocks which has a low float, stock which had been neglected by the market, the stock which has like basically had a much more bigger surprise than other stocks. That's the one way to look at it. The other way to look at it, if you don't want to get into stocks which are very volatile, is to look at stocks which are very high institutional ownership. The stocks which are 1,000+ mutual funds owning them tend to behave differently on earnings than the stocks which are held by less number of funds. You can have more predictable intraday moves also on them. So these are some of the things which you can use in order to select the kind of stocks. The key really, if you're a short-term trader, is a very different way of doing it if you're just looking at for a day trade move. If you're looking at holding it for a longer term move, if you're looking at holding it for something like in a weeks or probably a month, then you need to have a set of criteria which you use rigorously to select this kind of things. And setting up that kind of a criteria and using that kind of a criteria will allow you to not get flustered by a day like today and not feel like a kid in a candy store.